Good morning, everyone. Paul Duncan here with GammaEdge. It is Wednesday, the 23rd of March. When we take a look at the overall indices, we've got the SPX, you can see, is growing on the call side in relative magnitude. We got 40,000 indicated here, 50,000 indicated here. Units aren't necessarily important here. Just know that when the green wing grows, this is net cumulative positive gamma, and we're getting an increase here. Over here on the net negative cumulative gamma, we were at 600 today. Yesterday we were a little bit higher, so we've got a decrease in the net negative gamma, and we've got an increase in positive gamma. I note that the SPX is in an overall net positive gamma condition. The SPY, about the same thing. You can see visually how we've progressed in one day. Again, in terms of magnitude, we're about the same on the put side or on the net negative gamma side, but in the call side, we've increased a significant amount. In fact, we've almost doubled, so that's worth noting there. On the Qs, still weak, net negative gamma condition, but we are improving. I think it's important, and you'll see some results here shortly. We've got a significant growth on the call side, and on the put side, it's actually decreasing. So we're dropping on the put side, raising on the call side, or net positive side. On the IWM, same story. We are basically increasing on the call side, or net positive gamma, and we are decreasing here, or remaining constant on the net negative gamma side. When we take a look at the expiring SPX, SPY, Qs, and IWM today, you can see by and large net positive across the board, and you can see that just visually here by the integration curve, where the green wing is much larger than the red wing, or the net negative gamma side. What that typically means, especially when the spot price is above these large dominant levels, is that everything to the left that is colored green is in the money. Now, the SPX is a cash settled index. We do not necessarily have to monetize today, but if we do see some monetization here, that could present some downward pressure on the SPX, so I would be looking for that in the afternoon session. The SPY, look for 450 to be that line in the sand. If we're above that, the SPY, the Qs, and the IWM, unless people want to be assigned, most likely these will be closed out before the end of the day. And you can see there's a fairly significant amount of in-the-money calls here. So that in-the-money call monetization, the moneyness of the structure could force a dealer reaction to the downside. IWM, you can see we're right at the line there, so just keep a watch on that. Watch for some weakness, but overall bullish in general. Short term today, we may see some monetization. When we take a look at the overall edge, there is an edge here, but I want to go back and I want to highlight something that I said earlier here. The first thing to realize is that we have a net positive on the SPX compared to the negative, and it's increasing, right? So it's above, and here you can see it's above, whereas if we look at the Qs, it's below, and it's below here for IWM. This is significant when we look here. We do have a measurable edge in the growth of the net positive, so that is the red wing, or excuse me, the green wing, but when it's smaller than the red wing, right? So this exists today for the Qs and the IWM, so I would look for continued strength in the Qs and the IWM. Testing reveals that results are not as strong when we have the SPX and the SPY already in that condition. So think of it as overbought, oversold. We're already fairly mature in the SPX and the SPY, where we still have some room to the upside in the Qs and the IWM. This suggests that if we can at least stabilize here for a while, that the Qs and the IWM may move up. For that reason, I'm going to color things yellow and green today. Still bullish, and you can see the distribution of returns here is still on the right-hand side of the 0% line, so there is a measurable edge after 21 days of holding. But I will note, not as strong in the SPX and the SPY. When we take a look at the market model, still weak on breadth. We did not get a lot of institutional participation yesterday, although there was some to the upside. And you can see that the euro close is having an impact on our behavior between the morning session and the afternoon session. So we're going to look for probably more of the same, look for some weakness into the euro close and in the lunchtime session. And then after everybody comes back, we'll have to see. That may set the tone for the rest of the day. When we take a look at the ES, the thing I want to point out is all the levels are unchanged. The structure for the June expiry is not moving. Note the vol increase overnight. We think that is fairly significant. We're not collapsing, so that could bring some weakness into today's action. Again, look for the yellow and the green. Overall bullish, yes, but watch this level here, especially this 4480 level. Below that, we're in this undefined range again, and we could have some volatility and some weakness in there. When we take a look at the vol and the VIX, continuing to reduce in the vol, that's good, that's bullish, but you can see that we're starting to curve a little bit here now on the VIX, and so I would be looking to possibly put a spread on up here if we start taking out the previous day highs, and so we'll just have to wait and see what we have here. When we take a look at the expiration, this is the SPX, so this is the combo complex. It's actually changed quite a bit from yesterday. We've got a significant growth here in gamma out here all the way into the April expiry, and the end of quarter expiry for across the board for the combo complex continues to get weaker relative to yesterday. Now this is kind of odd because we're right at these prices, and so this indicates that calls are being added to the structure, and we know that, and we know it's not puts being closed, at least from the JPM perspective, because they are not liquid. They are going to sit in place until the end of the month, until they're rolled. The SPXW, which is the PM expiry, is pretty important also. You can see the distribution of net gamma above and below spot. What's key here is that we have really a dominance of gamma above spot, out of the money right now in most cases, which is where this is indicated. And when that gets monetized, that could put some downward pressure on things. So just be aware that because of that short-term gamma magnitudes growing here, and because of the potential of monetization, especially in the SPY, we could see some downside pressure again, coloring things yellow. Finally, when we take a look at the SPX 0 DTE, this is what is expiring today. We have basically a net positive expiry. It's fairly strong. The dominant call structure that is expiring today is up here at 4,600. That's way up the structure here, right? So we've got basically a lot of out of the money calls right now that are not incentivizing people to take those off the table, especially being the SPX. I think this is important because you can see we are still above this 4,500, which is a dominant level. If we drop below 4,500 today, we're going to see weakness up here, no real push to monetize and capture those gains, that could open the door, by the way, of just drifting around in this particular area. If we drop below this 4470 or 4490 area, you can see that the net gamma starts getting negative, and then below the 4435, we're back into a negative gamma condition in terms of the expiry, and that actually could grow a lot of the net negative gamma on the downside. Again, since this is an expiry, if we do drop down, look for the puts to be in the money, and that could actually cause us to reverse if they are monetized and actually come back up into this zone. So I think with the expected move a little bit higher than it was yesterday, I think with the fact that we took out or are sitting right at the JPM hedge level of 45.10 with the copycats at 45.20, there's significant structure here that I didn't show. Go back to yesterday to review that, and just knowing that we've got both puts and calls here mostly out of the money, so we're right at this transition point. We're probably going to stay more or less within this area, but with some volatility. So that's it for today. Please join us at GammaEdge.us. That'll take you to a Discord sign-up page, and that'll kick on a 14-day free trial where you get to test all the tools. We just added some new things overnight for kicking the tires, so I urge you to come on in and check things out. Follow us on Twitter, of course, at GammaEdges with an S, and since you're watching this off of YouTube, we ask that if you like the content, please like it and subscribe, and that'll help keep powering us up in the search engines. So thanks, everyone. Make it a great hump day, and we'll see you tomorrow.